Gold is really in the comeback. Why we still like it. Udo, gold, why do you still like it?
Very easy. It's real money.
That's right.
No kidding. No, there are many reasons to own gold, and I think it's not just the physical demand by Asia and central banks and the ultra-loose interest rate policy worldwide, with negative interest rates, and with more and more people buying into gold ETFs. And nowadays you see whenever there's a little correction in the ETF and gold, there are buyers coming in, and I think people recognize they want to have kind of security, they want to have own real money. And I think that's one of the key drivers of the gold price. It's not just inflation, or not about inflation basically, it's about governments who are so much in debt, who are maybe not surviving the next big debt crisis. We don't know, is it Greece, is it Italy, whoever is going to survive the next big Lehman moment, which might wait for us in the next few years.
Okay, so that was kind of like a physical demand, but how is the technique here in the market?
The technical you see on the next slide, it's I think we have a nice bottom actually what we had, and it's like a reversed head and shoulder. Then we took out more or less the 1200 line, which is now a big support, the $1,200 per ounce. And now we are on the way to 1400. Below 1400 there has been kind of resistance, and around 1380 there is resistance. And once we are able to take that out, we might go up to 1500. At the moment we are kind of in an ascending triangle technical pattern, which is basically a bullish confirmation pattern.
Interesting. Okay. I mean, gold performed very good, very well this year, but how is it with the relative performance also?
It's not just the absolute performance. Gold is performing against everything else relatively very good or better than the rest. We are outperforming against stocks, especially against the European stock market, also against the American stock market. Gold is outperforming against bonds, against all major bond indices, and gold is even outperforming against commodities. So gold is in a more or less in a bull market against all these markets, which gives more support to the gold. And our fund is not investing in gold itself. We try to select gold shares. So we are investing in gold shares, which normally go hand in hand with gold, but sometimes they go a little bit forward, sometimes a little bit backward. We saw a terrible bear market in gold shares the last couple of years, and some miners even going out of business. And you see that with the gold Hui ratio, with the gold Amex Gold Bucks index, and that ratio, the gold shares to gold itself, has been at the lowest points I think ever. And you see how that changed now in the Hui gold ratio market, but it's just slightly up, it just doubled. That's a nice performance this year. The gold shares doubled this year basically, or even more, but still historically seen, that ratio is now at 0.2, and the long-term average is about 0.35, and we saw even higher ratios of 0.5. So we still think there's still potential in the gold shares.
There's lots more room. That's great.
Absolutely.
Fantastic. Let's look also here. Gold stocks are really cheap. That's the other thing. I mean, I think you have calculated the value of the Hui index. Is that correct?
Yeah, we calculated the actual market cap of the Hui index, which is the biggest 15 gold shares worldwide. And if you put them together, they have a market cap of around 133 billion, which is, not bad. But if you compare these 15 biggest gold shares with all the gold in the ground and the gold they have in deposit, they are not even 1/3 of I don't know, Facebook. Facebook is nearly 3 times as worth as the biggest 15 gold shares. Or Apple is nearly 600 billion. And or Google, or now called Alphabet. And I think I'm not sure what they produce. They are important internet companies, but compared to the 15 biggest gold mining companies on this earth, it's still, I think, a tiny market cap what we have here.
Yeah, that's right. And I mean, even with the cash of Apple, they can easily buy the whole index. So that's a pretty funny thing. So with your fund, we see here stock picking pays out. What is the difference? What you are doing there?
I think we are not investing in gold. We try to pick out the best gold shares. We have been careful on gold stocks the last couple of years. We increased it considerably end of last year, beginning of this year, after we nearly saw the lows, or shortly after. And but you could even see in the last 2 years, if you did the right picks, even if a gold stock bear market like Northern Star in Australia or Klondike's mining in Canada, that they did already very nice performances. And this year, we've started this year, you saw like the whole gold market exploding. So people say even shit is flying. So no, we have a tremendous pullback seen so far. Now the market might be a little bit overextended and needs some time to, maybe relax a little bit. We are a little bit overbought, but still there's still lots of potential. And one of our mines we really like is Klondike's mines. That's a long-term outperform. You can see against the Hui index.
Mm-hmm. Where have you bought in Klondike's?
I think we bought it around $3.50 after we met the CEO in St. Gallen, and he came actually to our office to present their strategy, and I think they do really well in Nevada, and they just duplicated their success in Manitoba, started the next mines there.
Yeah, they just bought 2 other mines in Nevada?
2 other mines, and I think they produce now this year about 150,000 ounces of gold. And I think that's one of the midterm producers we really like, with growing, producing, cost control, and it's like family business there. So that's our favorite business.
Super.
Actually.
Perfect. Let's come again in the last section here to your fund.
Yeah, I think.
And I think you had a great performance so far.
Yeah, we did quite well the last 3 years. Actually, we had quite through our stock picking. If you compare us with the majors in the natural resources sector, we had a good defense, I would say, that gave us, especially in this sellout last year, a very stable performance, not too big losses. And now this year we turned the offensive around, and we are ahead of the pack. And I think by end of July in CityWire in the UK, they ranked us as #1 fund on the equity natural resources for the last 3 years, which is, I think, quite good.
Fantastic. Udo, thank you very much. Keep it going, and keep fingers crossed that you can move on with that success.
Thank you. Thank you very much.
Thank you very much.
Thank you.
Ladies and gentlemen, there was Udo Sutterluety, the fund advisor of Sunares Sustainable Natural Resources Fund. Well, gold is on, gold stocks are on. Thanks for watching us. I'm your host, Jochen Steiger from Commodity TV, and in partnership with Dukascopy TV, bye-bye from Geneva.